we're featuring ROST stores that's had a wonderful trend and a great business model within the retail structure. However, once again, as we have pointed out, just like we did back in around the middle part of April, later part of April of 2011 there, when we find overvalued stocks that are currently overvalued or where they will be overvalued, is the trend here, the trend off of the 2009, 2008 bottoms here has been a very long-term, multi-year, 1 year, 2 years, 3 years. So you've been rising with this diagonal line, and you come right down here through these lows in 2010 and ascend up here 2011 period, and now we've made another 2011 high MMTs. However, clearly we look for the overvalued aspects of great companies because they, ROST stores, nothing wrong with ROST stores being ROST stores. We're going to take a look here at the 2010 lows on a weekly level. We've come up and we have made higher highs, but there are times when you get too overbought, such as right in here, like we are up at the ceiling up here, and that percent DS at this time, and this overbought reading structure was at about 91% here, back on 5/8/2011. And you can clearly see that from this high original reversal, because of the way it trades, that then it was $82.67. And where we hit the bottom lows over here during that 2000 era, where markets were going down and all the events and everything else, we got ROST stores. That's a pretty good spread down here. Once again, it's a weekly chart. My point, MMTs, it got overbought. When it made its lows over here, it was at 31.31%. And once again, this thing was necking up here. Look, right here at 91.62%. Now, granted, it's making 52-week highs and it's very strong and weekly rising and everything you would want. However, you have to know when things get very, very, very overbought, and as they get a little bit more overbought, you want to be using the put options, and we're looking at put options and strike prices here in the 218 period, okay, going further out into 2012. Not that ROST is a bad company or anything, but ROST is a little bit overbought. And we teach every MMT that when there will be a pullback, and there will be, the current percent DS now is 94% on a weekly level. A weekly level. Mathematically, it can only go so high, and all the good news is going to be priced into ROST stores' great executing model and the great company that they are and everything that they've done to earn this price. There's going to be a point where the price is going to have to come down because it's too overbought, and that happens to be the case in MMTs. I'm going to conclude the overbought scenario, how to trade it when it gets this overbought, and why the news is already priced in the great company that it is and the great bull rally that it has, but why do they always have to pull back? You'll find out why.